Why do most people lose money in the stock market even when they are smart? Because intelligence does not make you rich, behavior does. Today, we are diving into The Intelligent Investor, one of the most influential investment books ever written. A book Warren Buffett calls by far the best book on investing ever written. This book will teach you how to build wealth not by predicting the market, but by protecting yourself from it. Investing is not about getting quick rich, it's about not losing money. This book focuses on investor mindset, margin of safety, market psychology, defensive versus enterprising strategies. Graham says the goal is safety of principal and an adequate return, not maximum return, adequate return. Investor versus speculator. Graham makes a sharp distinction. Investors analyze businesses deeply, seek safety, aim for steady returns, think long term. Speculators follow hype, chase quick profits, depend on price movements, often lose money. He says speculators base their standard of value on market prices, while investors base value on business fundamentals. Focus on intrinsic value, not market type. Treat stocks as ownership in real businesses. An intelligent investor is one who buys when others are fearful and sells when others are greedy. Investor versus speculator. Investors seek long term value, speculator chase long term gains. Graham warns against emotional decision making. Ask yourself, are you investing or gambling? A margin of safety. Buy below intrinsic value to protect against errors. Buying a stock worth 100 rupees at 70. A margin of safety is always essential. Mr. Market metaphor. Mr. Market offers prices daily, sometimes irrational. Your job is to evaluate, not react emotionally. Be patient and rational. Defensive versus enterprising investor. Defensive, passive, diversified, low risk. Enterprising, active, analytical, opportunistic. Choose your style based on the temperament and time. Modern relevance. Graham ideas still apply in the today's volatile markets. Buffett's success is rooted in these principles. Use Graham checklist before any investment. Mr. Market, your crazy business partner. One of the most powerful lessons in the book. Imagine you own a business with a partner named Mr. Market. Every day you show up with a new price. Some days he is euphoric, price too high. Other days he is depressed, price too low. Your job? Be realistic. Who buys from pessimist and sells to optimistic? Don't tell, don't let emotion control you. You benefit only when you think independently. Margin of safety, the heart of the book. The margin of safety is the central concept of investment. This means never overpay. Buy when intrinsic value is far above the market price. Allow room for error. Why? Because every investor is wrong sometimes. The only protection is a big discount between price and value. Defensive versus enterprising investor. Defensive investor wants minimal efforts, low stress, reliable returns. Strategy 50% stocks, 50% bonds. Large, stable companies, very broad diversification. Enterprising investor wants high returns, ready to do research. Strategy find undervalued stocks, focus on large companies temporarily out of favor, look for bargain opportunities. The psychology of investing. Graham says your biggest enemy is not the market, it's you. The secret to your financial success is inside yourself. Example, even Isaac Newton lost a fortune because he could not control emotion. Smart hedge funds fail because they assume the market behave normally. Intelligent investor stay calm, stay rational, avoid hum mentality. Diversification, you must diversify that even with a margin of safety because one investment can still go wrong. Enough diversification ensures overall positive results. This is the same principle used by insurance companies. What makes you an intelligent investor? According to Graham, you don't need high IQ, exotic formulas, market predictions. You need patience, discipline, emotional control, and independent thinking. This book is not about beating others, it's about not losing yourself. If you want to build wealth slowly and safely, if you want to make wise decisions even when the market goes crazy, if you want to become truly independent, then Intelligent Investor is not just a book, it's a lifelong guide.